Good morning, everyone. I'm Greg Faranello, head of U.S. rates for AmeriVet Securities, and welcome to Monday Minutes. Brief look back last week. Obviously, the Fed chairman pushing back on negative interest rates. At the end of the day, the Fed needs the banks more than ever here. Everything they've done to date since March has been an alleviation of regulatory restrictions on a temporary basis for the banks. We know when looking abroad at negative interest rate policies, negative interest rates are punitive on the banks, and we just don't see that in the cards right now, all things considered. In addition to that, Treasury supply, last week we had long end supply, which went extremely well. This week we get the new 20-year on Wednesday, 20 billion. Obviously, a little bit of an uncertainty here in terms of a reintroduction. We haven't seen one in quite some time. But when you look at the global landscape in terms of interest rates, you look at G7 rates, even out 30 years. The new 20-year will be yielding more than many of the G7 30-year paper. When you look at the pickup from 10 years to 20 years, it does seem to offer value here in a world where U.S. funding rates have come down since March. Treasury is much more attractive on a global basis now for foreign accounts. And in addition to that, on a yield basis, the 20-year part of the curve looks fairly attractive with a still uncertain environment in terms of the economy. With regard to the Fed, with regard to the chairman last night, 60 Minutes, still painting a fairly sobering outlook for the economy heading into 2021. We agree. I think most expect the economy to start to recover in the second half of this year, but a true and real recovery is likely to extend into 2021. This week, again, like I said, we get the 20-year on Wednesday. On Tuesday, Secretary Mnuchin, along with Chairman Powell, will testify in front of the Senate Banking Committee regarding the CARES Act. We look at the PPP program, a lot of chatter around that in terms of how that program looks, the effectiveness, the efficacy of that program, with a very short timetable of 8 weeks for businesses that, quite honestly, are still unclear in terms of, first off, when they're going to reopen, but even more importantly, when you listen to the chairman speak, when you listen to some of the small businesses speak, the real unknown here is the demand side of the equation. We know that consumers are anxious to get out and about. We know consumers want to get outside. They want to hit the beaches. People want to see their friends in a safe way. But the reality is we just don't know from an economic perspective how consumers are going to behave. The demand side of the equation, in our view, still remains the big caveat here. And time will tell how the demand side shapes up in terms of the reopening on a state-by-state basis. With regard to this week, again, we get the chairman again on Tuesday. We get the 20-year on Wednesday. And again, we'll be watching the claims number and the continuing claims number on Thursday for clues that the shedding of jobs is actually decelerating. It's obviously relative here. We're still in the millions. But at some point, we will need to see a bottoming of the employment picture to feel confident that we're turning this ship around. The chairman alluded to that last night, saying he thinks the claims numbers should bottom in the next month or two. We think that could be fairly aggressive, but it's certainly possible. I'm Greg Faranello, and this is Monday Minutes.